Singapore's non-oil domestic exports performed better than expected in August. It fell 8.9% compared to last year, ending 5 months of double-digit drops.
Economists say Singapore's NODX for August was better than anticipated. It was weighed down by electronic exports, which fell nearly 26% on year, led by contractions in integrated circuits, disc media products and PCs. Non-electronic NODX slipped by 2.2%, easing from the 6.7% decline the previous month. Analysts have largely cheered the smaller decline.
The export decline around the region is still consistent with the overall trend in the region of slower trade in general. Countries like Indonesia, who earlier this week reported its August exports, reported its 10th month of export decline. For Indonesia, it's a case of both oil as well as non-oil exports coming off. For Taiwan, we saw stronger than exports growth for the second straight month, positive growth actually, led by stronger exports to the US.
Exports to most of Singapore's top markets decreased, except for China, which surged 38.5%. One economist says it's because of rising exports classified under miscellaneous transactions.
We suspect that it would have been non-monetary gold exports. This would be defined as gold which are not held by the authorities, which drove the surge to China as well as overall non-electronics NODX. August was a month where we saw a big intensification of the US-China trade war, and following that we saw that the Chinese yuan actually broke 7. And we think that there has been some rush for gold as a safe haven, and demand for gold has been surging, as we can see by the prices.
She adds that the electronics sector may stand to gain as the US signaled intentions to impose a 15% tariff on Chinese consumer electronics in December.
We think that would mean a lot of firms will be front-loading their exports. So you may see a bit of an improvement in the third quarter and the fourth quarter. So we think that electronics exports numbers may improve for the rest of the year.
Analysts believe the recent disruption in oil supply from Saudi Arabia could lead to weaker exports ahead. They say a prolonged surge in oil prices would mean higher prices for consumers, but the trickle-down effect may be limited in the short term. Enterprise Singapore expects NODX to be between -9% and -8% for the year, down from its earlier estimate of between -3% and -2%.